Good afternoon and welcome to today's webinar, Benchmark My Practice and Profit Improvement Strategies with Paula Wheatley from Charnwood Accountants. For those of you who haven't joined our webinars before, my name is Lucy and I'm an assistant consultant at DG Legal. The slides from today's presentation will be sent over tomorrow, as well as a recording of the webinar. So if we do run over or you need to leave at any time, you'll be able to watch the rest. We are in webinar mode, which means that we can't see or hear any of you, so please use the Q&A function so that Paula can answer your questions at the end. Paula has been with Charnwood Accountants since 2011 and heads up the solicitors division of the firm. Paula is a true specialist in advising legal practices on their financial planning, tax efficiency and compliance with SRA audit regulations. Over to you, Paula.
Thank you, Lucy. Thank you all for joining me today. Just to give you a bit of background for us in addition to what Lucy said there. So I will just take a moment to explain how Charnwood Solicitors came about. So we formed in 2004 and started working with solicitors quite quickly. We utilised a tax saving model which generated savings in excess of £5 million for our clients. Unfortunately, this model was closed, but during that time we built a large number of solicitor clients which covered a vast range of legal sectors, and so off the back of it we created Charnwood for Solicitors. I'm one of the partners and I head up the solicitors department. So over the years my role has developed from the standard services of completing the audits and preparing the accounts to assisting the cashiers and practice managers with internal compliance. And now my role involves spending time with the partners of the firms discussing their development of the business and succession planning. So I've therefore witnessed each area of practice in action and feel that I'm really able to add value to the clients that I look after. So today's webinar will talk about ways to improve the profit within your firm, and I will also leave time at the end for questions. So my mission for today then is to ensure that every attendee leaves with at least one useful tip off the back of this webinar. I hope there'll be more, but if I achieve at least one, I will walk away from this happy. So when we look at profitability of firms, we look at industry averages when we're talking to our clients, and we talk about something called super profit. So what super profit means is it's the profit for running the business after you've been paid a salary for your role. So effectively, it's like the perk of ownership. So an industry average super profit is around £66,000, and the notional salary for being a partner within a firm is around £85,000. These, when I talk about these averages, because obviously I look at them for across the country, they're probably slightly on the low side for the London area. So you just need to bump them up a bit in consideration if you're a London-based practice. But what it means overall is that you should be achieving at least £151,000 profit per annum per partner if you are running a successful practice. So off the back of that, you then need to consider ways that you can get to that figure. And there are three main areas of consideration within a firm, and that's staff efficiency, increasing income or revenues, whatever you like to call it, and also reducing overheads. So I'll look at each one of these in turn for you so that you can understand the concept and how you can work with them to improve profitability. So first of all, we'll talk about staff efficiency, and this is the main cost in any solicitor's practice, and it breaks down between your fee earners and your support staff. So for fee earners, the industry average is approximately £40,000. For a London practice, it's probably more like £60,000. This should equate to about 28% of the fees that they generate. So in other words, a fee earner on a 40k salary should be able to bring in around £143,000 in fees per annum. Then you know that they're doing their job in line with what industry averages are suggesting. Then we move on to support staff. Now, typically, solicitors' practices were really heavily geared with support staff, historically it being a 1-to-1 ratio. So what I'm saying there is for every fee earner, there was always one support staff member with them. But now a lot of firms are working to a 1-to-2 and a 1-to-3 ratio. You need to do what works for you based on the administrative need that you. But the important question you need to ask about this whole concept is, are the staff worth it? And the business of a solicitor is to sell time. So by way of explanation, if you were running a retail shop, you'd know exactly what products you were selling, how much they sold for, and what profit was being made. So as a solicitor's practice, your commodity or your product is your time. So you need to follow that same concept in order to prove that it's making the right amount of profit. So how on earth do you do that? Well, time recording. A lot of practices don't record time at all, or if they do, they only record chargeable time. Ideally, all time needs to be recorded. So if you work an 8-hour day, then the timesheet should be completed for every single staff member for all 8 hours. And by doing this, you can very quickly identify where any inefficiencies lie. But also, in addition to that, you can highlight who your star employees are, because some people may be going above and beyond and you don't even realise it. So the key to identifying all of this is also working out the level of non-chargeable time and what their billable value could be. So you can do something called a Fianna Matrix. And this is what one looks like. So a Fianna Matrix calculates what turnover each Fianna can generate. So a Fianna that has very few management responsibilities would probably be able to generate fees with about 85% chargeable time. So this would factor in holidays and CPD time and things like that. Whereas if you had a Fianna that had department responsibilities, for example, or if they do staff performance reviews or they attend management meetings, they might only have 60% chargeable time because their role is slightly different. So you'll see here, if you look at this Fianna Matrix, you've got your staff member, the hours per annum. So that's the hours that they're available to work. So obviously some staff might be part-time, some might be full-time, somewhere in between. So it's their working hours that they can do. You then put in their expected chargeability percentage based on what they do within their role. And that gives you how many chargeable hours they could potentially achieve per annum. You then simply apply this to their charge out rate to give what could be billed by them per annum, so your expected annual turnover. In our experience, this exercise is really quite enlightening because usually there is a 30 to 50% shortfall in staff performance to turnover. And the only way you can really get underneath why this is by reviewing their timesheets, which is going to be ineffective if you don't fully time record, which is why I'm emphasising the importance of 100% time recording. So once you've completed this matrix, you then, if you have a shortfall, you may be wondering why this has happened and want to get underneath the numbers to explain it. So I thought I would spend some time giving some examples of where we found that this has gone wrong. So, as I mentioned, most firms only record chargeable time. And in reality, this has very little benefit because staff members then have the ability to only put down the time that they feel is right for the bill that's being delivered, regardless of how long it actually took. So they could be doing this because their charge out rate's unrealistic or too high for them, or because they've misquoted for the work and they don't want to have an awkward discussion with the client, or they're just not quite trained enough and don't want to admit that they can't do something, so they're only putting down the time that they think it should take. Many firms also don't record fixed fee work. They just leave that as a complete non-recording activity. But by not doing this, you will never know if you're undercharging for the work that's being done, or if you've got a staff member that's lacking training or is inefficient. If they're not recording their time in that fixed fee department, you're never going to be able to identify that. The recording of non-chargeable time also means that you can track what they're doing when they're not generating fees. So there could be genuine reasons for this, like they do marketing or networking or staff development, staff management, all those things that I've already mentioned. But it could just be that you've got a particular staff member that puts 2 hours a day down to admin. It could be genuine admin, and you would need to get under that to see if that's why. But if they've got a secretary as well, and you're a firm working on that 1-to-1 ratio, would a fee earner need that much admin time? So then you'd need to place considerations on, is it that the secretary is overworked, so isn't getting to it, and the fee earner is picking it up themselves? Or is the secretary not performing well enough? Or is the fee earner actually just not working hard enough and is hiding their time within admin and not actually explaining what they're up to during those hours? So then we move on to the next concept, which is your non-salary overheads. So on average, non-salary overheads represent about 30.6% of your income. So by way of an example, if your turnover is £1 million and you could reduce that non-salary overhead figure by 2%, so bring it to 28.6, that would equate to a £20,000 pure profit hit, where you've not done any huge amount of work or made any massive changes within your business, but small efficiencies have created that extra 20k of profit. So let's look at what things you could consider to be able to achieve that. So the biggest single cost within any solicitor's practice, other than staff costs, is their practice indemnity insurance. Most people do tend to use brokers to review these policies, but if you don't, I would strongly recommend that you do to shop around, really, because if you renew with the same firm every year, you might not necessarily be getting the best deal. Brokers also brought in the ability to do your policies over 18 months, and it is worth considering whether or not to do that, because you can fix in rates for longer then, so you might be able to make a bit of a saving there. Although I fully appreciate at the moment that PI insurance is going up dramatically, and so savings are going to be very minor, if at all, in this area at the moment. Another thing to look at is your business rates. By way of example, as a firm, Charnwood Accountants, we challenged our rates and used a rating agent and received 21% reduction in our rates bill, and also a £10,000 refund after the challenge. If you do want any contact details for a rating agency, I can pass them on after this webinar, but it is something that's well worth considering, especially if you've got a large office building where you are paying high rate charges. And then we move on to leases. So many firms take out long equipment leases, which carry significant premium over purchasing them or on a loan. Examples might be your big industrial sized printers and things like that within the office. It's just really important to weigh up, especially if you come into a renewal phase with them, whether the cost of leasing it over a long term is more expensive than footing the outright purchase up front and just having it as your own. It could be marginal, but it is just well worth looking at in the grand scheme of things. You might be able to make some savings. You also need to think about the utilisation of your technology, and many firms still have a really high reliance on traditional paper and post. This might have decreased somewhat since COVID because we've all been working remotely, so you might find by default you started to do things in a more paperless style, but post costs went up considerably over the last few years, and so you can make some quite easy savings just by thinking about being more efficient in this area. I know a lot of practices are now looking at client portals, so they upload documents to the portal rather than sending them out via post, which also is good for the clients because it gives them later access to that information if they need it. So it's just worth looking at ways you can create efficiencies there, or not printing draft copies of things, viewing them on screen, getting them reviewed by your peers, and then printing the final copy off instead. Just small things like that, really. You then move on to your utilities. If you're not in a fixed contract, it's something to consider. Rolling contracts do tend to be more expensive, so you should always look to try and get into a fix and use a broker to do this for you, because it is a bit of a headache to think about, and it's one of those things that everybody puts off in the mind, but the brokers can do the whole process for you, so you have very little involvement. So it's an easy win, really, and not having a huge strain on your time if it's something you could review. And then finally, there's the expensive financing side of things. So some firms don't carry quite enough working capital to cover their day-to-day expenditure. It's working capital is no fixed number. There's not a number I can tell you this should be your working capital. It's just dependent on what your firm's needs are and the size of it. But for a firm that's not carrying enough working capital, what it means is you're probably not able to pay your quarterly VAT liability out of your office account very easily, or you might have to finance your PI renewals or your practicing certificates, and that can be really expensive because it's short-term finance, so they put higher interest rates and higher charges on it to get the money, as much money as they can, for that loan being given to you. So if you can try and build up more working capital in the firm rather than using loans, you could make an easy saving there as well. So I just want to move on to talk about the reasons for good practice and overhead management. So as a firm, as I said, we work with a lot of solicitors, but generally we work with all kinds of clients. And in recent times, we've had at least 4 clients with combined losses in excess of £100,000 due to fraud. So if you're thinking about your overhead management and cost-cutting exercises and paper saving and things like that, you also should be considering the fraud elements that come within those. So the authorization of invoices and who does the purchasing and things like that. One thing we have just been telling people is a flat rule that you should make within your business now is that if you receive any change of bank details from any supplier whatsoever, or in your case your clients too, because you make payments back to clients once the matter's finished, you should phone them, get the person responsible for the banking side on the phone and say to them, have you sent us a change of bank details, and get a yes or no direct from the horse's mouth. It's the only safe way to deal with it now, because so many emails can be manipulated and watched that even if you pop an email over saying, I've changed the bank details, is this okay? You'll probably get a yes back, but not even from the right person. So verbal is definitely the way to go. So then in terms of purchase authorizations, a way of creating good practice things and helping with those efficiencies can be setting parameters around who can do purchasing and what they can buy. So who can do the buying within the business? Can staff just go out and purchase whatever they want and claim it back on expenses? If that's the case, do you have discretionary budgets? Do you have marketing budgets and entertaining budgets, those sorts of things, just so that you can keep a track on this? By way of an example, when we entered into lockdown, obviously all of our staff went to work from home. So we just set a budget of, if you need equipment for at home, it's going to make you comfortable, you can spend £150. If it's more than that, we're not saying it's a no, but you just need to give us a heads up so we can decide whether it's the right thing to do. So simple things like that can help ensure that costs don't escalate unexpectedly. Also, from the financial monitoring side, it's good practice to do monthly management accounts and not just print them off and store them away, but actually sit down and look at them on a month-by-month basis. If you can see that a cost is increasing slowly throughout the year, it's easier to do something about it as you're going along, rather than realise it after your accounts have been produced and profits have dropped and you suddenly think, oh, we've spent a lot of money on this area and I didn't realise. As a firm, we provide our clients with a 5-year summary. So we have the current year's costing breakdown within their accounts, and it compares to the past 4 years. So you can see if you've got gradual increases over time in your costs as well. And then we get underneath that information and look at why those increases have happened. Like a simple example, if your travelling costs were gradually going up, it might be a really simple answer and to say, well, yes, but also our turnover and our staff base went up and they were traveling to clients, so that's a direct result, that's okay. But it's just making sure you understand that, and that's what I mean by good practice. It's just knowing your numbers. So the next sector to come on to is your income side of things then. So there are 4 factors to think about when you're generating income, and that's your number of leads, your conversion rate, number of transactions, and your average selling price. Multiplying all of those together will create your fee income for you. Obviously, it's an estimate because you're using averages, but it just gives you an idea of the kind of income that your firm could generate, and then you can check if you're hitting it. So to put some examples to that, if I give you a baseline, this particular client has a number of leads of 1,000 per year, and they convert 50% of them, which is 500 customers per year. They on average do 1 transaction per customer, which is of a selling price of 2,500 and creates revenue of 1.25 million. In the same person, in the next example, this client does some upselling. So with the will, when they do the conveyancing, they upsold and sold a will with the conveyancing transaction. So they didn't increase their number of leads and conversion rate, but they actually, number of transactions went up by 5%. So they managed to increase their revenue by 62,500 as a result, which is a 5% increase. In the second example, they did the exact same thing of upselling, but in addition to that, they worked that little bit harder on their conversion rate. So they got some staff doing more follow-up calls, requesting feedback from the customer as to whether they'd like to go forward, and if not, why not. So they increased their conversion rate by 3%. And in addition to that, they also increased their selling price by 5%. So by doing that, they've got 3 new achievements within there, which are very quite small items, and they managed to increase their revenue by 197,000, which is roughly 15% of the original revenue. So it's a good thing to do, and it's subtle changes and marginal gains is what we're saying there. So you might think, oh, that's all really easy to say, but how on earth do you go about it? So I've put on this slide just a mass list of different things you can think about to do. I'm not going to read them all out because no one fits all. There's not one answer that will suit everybody. So by way of an example in that, if I use our firm, Charnwood Accountants, as an example, we do very little advertising. We don't advertise in magazines. We don't send out very much promo material. We have merchandising products, but we don't actually have a flyer or anything like that. But instead, we build really close relationships with our clients, and so they become our referral sources for us, and also we can very easily upsell to them because they already know that we can demonstrate how much value we can add. So the upsell becomes an actual very easy exercise for us. But by way of comparison, if you've got a conveyancing firm, I'd expect them to have a really high advertising budget because they've got a large number of transactions. They need to get their name out to as many people as possible. They've probably got fixed fees to be competitive. They just need to make sure that when they are being competitive, they're comparable to the firms around them, but not undercutting to the point they're not making enough money. But they also want a really high conversion rate. So they need to look more at the conversion rate side of things as well, not necessarily the number of transactions. So they might be thinking about how they get the onboarding process done more quickly and things like that, so that people think, yes, that's amazing, I can have my conveyancing transaction set up in 2 days, whereas the other firm said they'll get back to me in a fortnight. So it's those things that they need to concentrate on over it, which is different to another firm. And as I said, all elements of this will be trial and error, but marginal changes can make huge impacts. So even if you only pick one out of each of those headings and try them as a starting measure, you should hopefully find some gains within them. So then we'll move on to the benchmarking side of things. Just by way of an explanation, we have a dedicated website, as I mentioned earlier, for Charnwood for solicitors. On that website, you can generate your own financial benchmarking report, and the link was sent out to you before today's session. Some of you have completed it, so that was very nice to see. But if you haven't completed it yet, I would really encourage you to do so, because it will help you very quickly identify where you can start making some improvements. So the report asks you to input some key data, which isn't overly complicated. It should just be things you can pretty much do off the top of your head or by scanning down your latest set of accounts. And then it creates 8 key performance indicators which compare your business against averages, and then give you feedback on how you're doing as a firm when you compare to those industry averages. So here's an extract from the report just to give you an example. So this particular client, which is actually called Charnwood Accountants, which is not in keeping with this, but I couldn't put any other name on there. The fee income generated by the fee earner is much better than the industry average. So you can see that it says better in green. So it gives you that key, yeah, we're doing well there. And also their salaries are working better than the industry averages. So they're not overpaying on their salaries. So they've got the nice green, well done, here you go. And then you move through each of the KPIs and get similar outcomes. They give you an overview and an understanding as to what they mean. And then on the last page, they bring them all together in a conclusion for you. So this particular client has an amber, because we work on red, amber and green. And you'll see that although they did have quite a few good outcomes, their super profit is down. So that's in red. And also their non-salary overheads aren't doing very well. They're spending too much. So that's brought their average to an amber, where if they could just focus on those 2 things, which are very clearly visible to them, they might be able to make some simple improvements and bring that quite quickly up to a green. So that was a bit of a whistle-stop tour into profit improvement strategies. I will ask questions, but I just wanted to give you the opportunity to I'm just opening the chat now, to ask anything of me. I'm going to just skip ahead a slide as well to let you all know, because I appreciate that some of this is quite complicated in terms of what I've said. We offer a 2-hour meeting to assist with the completion of your benchmarking report. It's a free session available to anybody who's listened today. So if you didn't want to ask direct questions because you felt they were a bit personal to you, you can have a one-on-one time with me afterwards, and I'd be more than happy to give you some strategies to help improve yourself. As I said, it also does tell you the good things that you're doing as well, so it will direct you to where you need to be rather than trying to look at everything all in one go. And I don't think we've received any questions, so a stunned silence. I'm hoping that that's a good thing and that I've given you lots of information today. So I just wanted to add a final point to you all then, in that as a firm, we don't just work with the solicitors that we act for, we do lots of third-party advice as well. So we can do CGT reports in divorce and estate cases. We do the 30-day CGT reporting requirements for conveyancing transactions. We can do valuation reports and for disputes and expert witness work, and retainer work as well for ongoing tax advice that you might need, inheritance tax planning, those sorts of things. We've got lots of experts within our firm that can help with these things. So if there is anything that you're ever struggling with from an accountancy side of things, please do give us a call and let us know, because we'll be able to help them as well. So thank you all for taking the time to listen today. As Lucy said, the slides will be sent around and my details are just there if anybody did want to follow up. And apologies, Lucy, I think you was about to talk then, but I think I've literally just had some questions come through.
That's fine. I was just going to let you know that you had a couple of questions.
Yeah, it popped up as I was talking. So the free 2-hour session, if my details are just there, if you pop me a message, email or give me a call, and we can put something in the diary that's mutually convenient. And then there was one on the chat as well. Oh, somebody's asked about gaining access to the recording. DG Legal put that up on their website, I believe, don't you, Lucy? So that will be available for you as well.
Yeah, that's correct. It'll be on our website, and you should also get an email with access to both the slides and a recording of the webinar tomorrow. So
great, thank you. Thanks everybody for listening.
No worries. Thank you for your time today, Paula, and for presenting, and for everyone who stayed with us until the end. As we just said, the slides and the recording will be sent over to you tomorrow. This afternoon, you should also receive an email asking for you to rate today's webinar out of 5 stars. Please do leave us any feedback or suggestions for future topics is always welcomed. Next Thursday, we'll be presenting a webinar on the benefits and pitfalls of buying and merging a solicitor practice. So we'll see you then. Thank you for watching and have a good afternoon.